Yeah. Hi, everybody. This is David Skrika, editor of addictiveprofits.net. So again, in our podcast or video cast on small cap opportunities, we have Inca One, a company we've talked about in the past that is really firing in all cylinders and is very cheap right now compared to what's happening at the company. They just announced record production, cash flow, net income, etc. And Edward Kelly is here with me, the CEO. He will talk about it more than me because, again, I was telling him off air, I probably got Omicron over the holidays, and I wasn't that sick, but then I lost my voice, and then it just has stuck for the last 2 or 3 weeks. And I was telling him off air, it's probably a lot of people happy about that because it shuts me up a little bit. So we're gonna he'll do most of the talking today, but what we're going to do is talk about what's going on at the company. And then we're actually going to, what's interesting is that they have a unique business model in terms of this, refining the gold, then selling it. And really there's only one other company like this in the sector. It's called Dynacor. And Dynacor has probably been the best performing gold stock compared to the HUI over the last year, and potentially I think you were saying off air the last 10 years. So I'm going to show a chart of that, and maybe we can talk a little bit like potentially why you think you can be the next Dynacor. So thanks for being here. And like I said, from this point on, you're going to do most of the talking.
All right. Well, thanks, David, for having us back here again today. And yeah, I recognize the voice. I had the Delta variant back in the summertime. So you've had it for now 3 weeks. You probably got another 3 weeks to go. So your audience can have a break from you for another 3 weeks.
Yeah, unfortunately, I love doing these video and audio updates, but I sound so horrible. And also, one of the advice the doctors give you is try to tone down on the talking, right?
Yeah.
So
yeah. Anyway, well, yeah, thanks for having us. As you mentioned, we've got some news out today, just a year in review, and kind of going over our numbers as far as just the top line here for the last 12 months. And again, we produced new records in all areas, from, I guess, starting right with working capital in 2021, we raised a record amount of working capital, just around $12 million US. I think 11.5 million of that was non-dilutive. So that was something really what we had planned to go forward with, is non-dilutive working capital now going forward. And our purchases were records, just over 60,000 tons that we purchased in the year. And most of that came in the later part of the year because we were just raising the available working capital at that time. So that's when the milling records came in. And then obviously for the year, we came in at just over 36 million US for the top line revenue. And so we're very excited about that. And I think it shows and proves that what we've said along is that there is ample ASM material in the country available to purchase, but you have to have the working capital to purchase and fund it for that kind of 45-day window by the time you've purchased it, process it, and then sell it and get paid for it from our refinery. So that's been the bridge that we've been trying to gap. And I think we did a really good job of doing that last year. And that's going to be the number one initiative that I've got for 2022, is to raise the remaining non-dilutive working capital that we're looking for to fill the plants to full capacity and have it consistently filled on an ongoing basis in a non-dilutive way. We just say that on that basis because we're obviously in cash flow and cash flowing now. So overall, the market is very healthy in Peru. I can say the ASM market, artisanal small scale miners, came to an agreement with the central government in Peru in late December. And they've got some mechanisms in place to be able to have more miners to be able to become formalized over the next 3 years. I think it was a 3-year agreement that they came to. And, as you mentioned, Dave, our biggest, we call them competitor, I guess you could say, but really a colleague in the space is Dynacor. They've been in the business a little bit longer than us. And they've got, so they've had more opportunity to be able to prove their model out and raise the working capital needed to be able to buy that mineral and process it. And they produced just over 100,000 ounces of gold this year for the very first time. So a little bit of a distance in us, but we've got their capacity is 430 tons per day. Ours is 450. And I think the only difference between our business and their business in this space of ore processing is they've got probably about over $30 million of working capital, and we just got around around $10 million in working capital. So that's the gap that we've got to bridge this year.
Yeah, and what I will talk about is, again, to show this kind of price outperformance. The Dynacor is up 78% in the last year, where the HUI is down 11%. And then if we go back even further, let's actually go back 11 years, because that would go back to when gold topped in 2011.
Yeah.
Though Dynacor is up 122%, where the HUI is down 51%.
Wow. I didn't look at it that way.
Of course, if you take the Dynacor from its 2012 bottom, it's up like sixfold, where the HUI is down about 40%.
Yeah.
So,
No, I was just looking at their chart over a 10-year period, and it was very impressive. I think there's probably hard to find. I can't say it's the best 10-year chart, but it's probably hard to find a gold producer that has a, in kind of this comparison of what their 10-year chart looks like. So it's been very good for their shareholders. And also just to mention that they are paying a dividend, and I've had a share buyback program. So very robust company, and it's a great model.
Yeah, I'll quickly show on Yahoo Finance, and we'll show the dividend. Yeah, it's 3%, which is like with the 10-year treasury, basically 3.2%, roughly half that. You're making twice the 10-year treasury, twice what the S&P pays in dividend as well. And again, other than some of the larger cap gold companies, if you're looking for some income, it's tough to find them and go. And then on top of that, you're getting capital gains, right? Like in the last year, you would have made 60% in Dynacor. Plus, actually, if you take where it was at this time last year, that 10 cents on 180 would be actually over 5%.
Right.
Yeah.
And I think that I'm not sure how that's calculated, but they have been consistently increasing their dividend over the last couple of quarters. So it's
and of course their market cap is about 10 times yours.
Yeah.
So that can tell you where your stock can ultimately go. And also, like one issue with juniors, I recently did an article, and I talked a lot about stock buybacks in the States. Like something like Microsoft has 40% less stock than it did 15 years ago, which means it can make the same amount of money, and its earnings are going to be 40 to 50% higher on earnings per share basis.
Right.
And the problem with gold stocks, they're always diluting. So if you can get out of that dilution as a gold stock and start to reduce the number of shares out, that means like let's say you cut your number of shares in half, or Dynacor can. That means the stock can double, and it still has the same market cap.
Yeah. I mean, they've only gotten about 35 million shares out, I think 35, 36 million. So it's a pretty tight structure as is. Ours is about 38 million. So it's a good comparison of what we can achieve for here and strive for in the next 1 to 3 years.
So, and again, too, it's very, even as a senior miner, it's difficult to create cash flow and profit. The thing what you and Dynacor are doing, or what the royalty companies do, that's a totally different model.
Yeah.
Or what Royal Gold or Franco-Nevada does, or a new up and coming one, Metalla, what they all do is really create cash flow.
Sure. Absolutely. We don't have that expenditure for having to go out there and find exploration or acquire exploration up and coming mines for replenish that depleting resource cost of billions of dollars. And we've got our CapEx of building our plants, but then it's just really feeding the plants with mineral that we're purchasing. So that's really our exploration cost to the company, is getting that working capital. And the good thing is it doesn't disappear. It just gets buying more and more mineral and gets turned over in cash. And our goal is to increase that velocity of turning that money over every 45 to 60 days.
And actually, one thing I've never asked you, which I can't believe I haven't, but I should just right now. When, for example, or just to know how many, for example, like mines and miners do you buy from, in Peru?
Yeah, well, there are literally tens of thousands of them that are under the formalization process in Peru. We only purchase, like, it's impossible to buy from that many. And so we only purchase from probably around 200. And probably 80% of our mineral comes from, 20% of them. So it's that kind of a deal where you find your clients, they like working with you, and you give them a fair and transparent business transaction, and you just you pay them fairly, you pay them on time, and that's the model, how to build a long-term relationship with them.
Okay, yeah, okay. So I guess so I'm gonna post this video. Obviously, I'll post the corporate update as well, and where you talk about the cash flow, I've got I posted, I showed it earlier, the sales, etc. So
Great, well, appreciate that.
and actually, if you're looking at too, like from a valuation standpoint, with the $13 million market cap and 36 million in sales, you're trading at 1/3 of sales.
Yeah, and I'll just point out that that's US sales, 36 million,
Yeah.
and our market cap is in Canadian dollars.
So basically, actually 1/4 of sales, roughly.
Yeah,
So,
roughly.
and when I compare that, because I've been very active shorting the market for the last couple of months, because I think the US markets are a bubble.
Well, that's why our market went down.
Yeah.
No.
Well, no. Like tech stocks, that sort of thing. But many of the tech stocks I'm shorting, some don't even have sales, like kind of like .coms in 2000. And many that do, they're trading at 5, 10, 15, even 20 or 30 times sales. So it just shows you on a relative basis how cheap you are,
Yeah.
So,
yeah.
and
Cool,
thanks for
appreciate
being
that.
here. And we'll do another update whenever you have your next piece of news out.
Great. Thanks, David. Thanks for your time and taking this opportunity to meet with you even when you're sick.
No, it's not sick. It's just a bad voice, So, okay, thanks.